Yes, sir. Very happy morning to all. So we are going to quickly revise the chapter tax invoice. These are the sections applicable for tax invoice. Section 31 is talking about tax invoice. Section 31A, facility for payment. And section 32, prohibition of unauthorized collection of tax. Section 33, amount of tax to be indicated in the tax invoice. And section 34 is debit note and credit note. Right, sir? Section 31, tax invoice. The section 31 classified into three categories. Number 1, basics. Number 2, continuous supply. And number 3, others. In the basics, we have to discuss section 31 subsection 1, time limit for issue of invoice in case of supplier of goods. First of all, you may be either supplier. You may be either a supplier of goods or you may be either a supplier of services. If you are supplier of goods, when you are supposed to raise the tax invoice is explained in section 31 subsection 1. So 31 subsection 1 is talking about time limit for issue of invoice in case of supplier of goods. With regard to 31 subsection 2, time limit for issue of invoice in case of supplier of services. So if you are a supplier of services, see 31 subsection 2. So if you are supplier of goods, 31 subsection 1. If you are supplier of services, 31 subsection 2. For these supplier of goods and supplier of services, there are other provisions which are covered under 31 subsection 3. So what is 31 subsection 1? Time limit for issue of invoice in case of supplier of. What is 31 subsection 2? Time limit for issue of invoice in case of supplier of. What is 31 subsection 3? Other provision. Coming to the continuous supply, my dear lovable students, you may either do continuous supply of goods or continuous supply of services. Sir, when I should raise the invoice, if I am doing continuous supply of goods, which is explained in 31 subsection 4, and if you are a continuous supplier of services, you are supposed to raise the invoice as per 31 subsection 5. Are you all really with me? And 31 subsection 6 is issue of invoice at the time of cessation of supply. That means the supply what you are doing may stop. That is called as cessation of supply. When you are supposed to raise the invoice is covered under 31 subsection 6. And sometimes you may supply the goods at a condition that if you don't like the goods, you can return me. That's what sale or return basis. 31 subsection 7, invoice for sale or return basis. So what section 31 is doing, you may be either supplier of goods or you may be either supplier of variety of goods and services you may do. Sir, who have to raise when the invoice is explained in section 31? 31 subsection 1, time limit for issue of invoice in case of supplier of. 31 subsection 2, time limit for issue of invoice in case of supplier of. 31 subsection 3, other provisions. 31 subsection 4, issue of invoice in case of continuous supply of goods. 31 subsection 5, issue of invoice in case of continuous supply of. 31 subsection 6, issue of invoice at the time of cessation of supply. And 31 subsection 7, invoice for sale or return basis. Comfortable? Sir, tax invoice section 31. First question, sir, who have to raise the tax invoice? Who have to raise that? In order to raise the tax invoice, first of all, you should be a what person? You should take the registration either under section 22 or under section 24 or under section 25 subsection 3 of the CGST Act. So first of all, you should be a what person? Registered person. Who should supply taxable supply of goods or services or both. That means the product what you are dealing should be taxable. That means it should not covered under section 11 of the CGST Act or section 6 of the IGST Act. So first of all, you should be a registered person and you should supply taxable supply of goods or services or both. Or in certain circumstances, you should receive taxable supply of goods or services or both from an unregistered person. That means a supplier is the unregistered person and recipient is a registered person. In certain circumstances, our act is creating a responsibility or liability in the hands of the registered person who are receiving such goods or services or both to raise the tax invoice. Are you all really with me? So a registered person supplying taxable goods shall issue a tax invoice. In that tax invoice, description should be there, quantity and value of goods should be there, tax charged thereon should be there, such other particulars as may be prescribed should be there. Okay, sir, I am a registered person. I am supplying taxable supply of goods or services or both. How I should issue the tax invoice? What is the manner of issue of tax invoice, sir? Let me ask you a question. Are you a supplier of goods or supplier of services? If you are supplier of goods, raise the tax invoice in triplicate. Raise the tax invoice in. That means 3 copy has to be raised. Sir, original copy to the recipient, duplicate copy to the transporter, and triplicate copy to the supplier. How you have to raise the tax invoice? Original copy to the recipient, duplicate copy to the transporter, triplicate copy to the supplier. Are you all really with me? Sir, with regard to if you are a supplier of services, transporter concept will not be there. GTA will not transport from one place to another, right, sir? Then you have to raise the tax invoice in duplicate. Duplicate. Original copy to the recipient and duplicate copy to the supplier. Are you all really with me? Whatever invoices you are raising, being either supplier of goods or supplier of services, the serial number of the invoices you have to upload in form GSTR1. That is in return chapter in section 37. You will file the outward supply. In that outward supply, my dear lovable students, you have to upload the serial number of the invoices, whatever you are issuing. Are you all really with me? So, you may be a supplier of either goods or supplier of services. If you want to know when you are supposed to raise the what invoice, tax invoice, you have to come and check section 31. Section 31 is the authority section. Comfortable? In that, first we are going to talk about supplier of goods. Assume you are a supplier of, then the code word is section 147. Code word is section 147, section 31, subsection 1. Tell me section 31, section 31, subsection 4 and section 31, subsection 7. This is what? 147. Fine, fantastic. If you are a supplier of goods, 31 subsection 1 will be applicable, 31 subsection 4 will be applicable, 31 subsection 7 will be applicable. Are you all really with me? 31 subsection 1 again classified into 2 categories. 31 subsection 1 clause A, 31 subsection 1 clause B. 31 subsection 1 clause A, supply involves movement of goods. Are you a dealer of goods? Yes, sir. When you are supplying, is the goods are moving from one place to another? Yes, sir. If that is the case, you have to come and check the time limit under 31 subsection 1 clause A. Comfortable? Sir, if supply does not involve movement of goods, you have to come and check under 31 subsection 1 clause B. 31 subsection 1 clause. Sometimes you may supply continuous supply of goods, then you have to come and check 31 subsection 4. Sometimes you may deal with sale or return basis. I will supply these goods to you. If you like, accept the goods. Otherwise, reject the goods. That's what sale or return basis. If that is your scenario or situation, you have to come and check under 31 subsection 7. Comfortable? So, if you are a supplier of goods, the code word is 147. 31 subsection 1, 31 subsection 4, 31 subsection 7. In that 31 subsection 1, you are having 2 bifurcation. 31 subsection 1 clause A, 31 subsection 1 clause B. We are moving into 31 subsection 1. In that it has been classified into 2 categories. 31 subsection 1 clause A, which is talking about supply involves movement of goods. And 31 subsection 1 clause B, supply does not involve movement of goods. If supplies involving movement of goods, you are supposed to raise the invoice on or before the date of removal of goods. From the factory, the goods will be removed to the recipient, right, sir? So, on or before the date of removal of goods, you are supposed to raise the invoice. Then only such an invoice is a valid invoice. Otherwise, such an invoice is a invalid invoice. Supply does not involve what of goods? Movement of goods. On or before the delivery of goods or goods made available to the... So, your supply can be bifurcated into 2. Supply involves movement of goods or supply does not involve. If your supply involves what of goods, you are supposed to raise the invoice on or before the date of removal of goods. before you remove the goods from your factory, from your place, you are supposed to raise the invoice. Without invoice, the goods should not, sir, move from your side. Right, sir? If supply does not involve movement of goods on or before the delivery of goods, on or before the, or goods made available to the recipient, goods made available to the, you are supposed to raise the invoice. Then only such an invoice is a valid invoice. Otherwise, invoice is an invalid invoice. Comfortable, sir? Sir, issuance of invoice in case of continuous supply of goods. There is a concept called as what supply of goods, man? Continuous supply of goods. Sometimes yourself, that is supplier of goods and the recipient of goods, may enter into an agreement. By that agreement, the supplier would have agreed that I will supply you goods whenever you want. Morning you may ask 10 bag of cement. Sir, noon you may ask 10 bag of cement. Evening you may ask 10 bag of cement. Hello, sir. Whenever you are asking goods, I will supply, and I will not, sir, raise the invoice on a supply basis. I will raise the invoice on a weekly basis or monthly basis or quarterly basis, as the what may be, based upon the agreement what you and myself have entered. Right, sir? But whenever I am supplying, I will record that supply in the books of accounts. Are you all really with me? So, two cutoff will be there, called as successive statement of accounts. Tell me, successive statement of accounts. Number one, successive statement of accounts, or successive payment are involved, or successive. So, two checkpoint will be there. Either successive statement of accounts will be there, or successive state payment are involved. Because successive statement of account means April month supply, I will give a statement on May month 5th, or May month 10th, or May month 15th. This is called as successive statement of accounts. Or I will say that every month, sir, every next month, first you have to give me 10 lakh rupees. And during the next month, I will keep on supply to you. And we will see the accounts, and next month, you have to give me 10 lakh rupees. Are you all really with me? So, the connecting factor of the continuous supply of goods will be either successive statement of accounts will be there, or successive payments are involved. Are you all really with me? So, in case of continuous supply of goods, my dear lovable students, where either successive statement of accounts or successive payment are involved, invoice shall be issued before or at the time each such what is issued, or as the case may be, each such what is received. So, in case of continuous supply of goods, the checkpoint is either successive statement of accounts or successive payment are received, involved. Sir, being a supplier of goods, you are supposed to raise the invoice on or before this successive statement of accounts or successive payment are involved or received, as the what may be. So, this is the second scenario, that is what 31 subsection 4. So, 31 subsection 1 clause A and 31 subsection 1 clause B. 31 subsection 1 clause A, supply involves movement of goods. You are supposed to raise the invoice on or before the date of removal of goods. 31 subsection 1 clause B, supply does not involve movement of goods. You are supposed to raise the invoice on or before the delivery of goods or goods made available to the recipient. Comfortable? In case of continuous supply of goods, two characters will be there. Either successive statement of account or successive payment are involved. As a supplier, you are supposed to raise the invoice on or before the successive statement of account or successive payment are involved, as the coming to the, sir, the next one, goods sent on approval basis. Goods sent on, I am the supplier, my dear lovable students. I send the goods to you. If you like, you accept the goods. Otherwise, you reject the goods. Are you all really with me? That means when I am sending the goods to you, even though this is a situation of supply involves movement of goods, I will not raise the invoice. I should not raise the invoice, because till you accept it, it has not become supply. Are you all really with me? That's why they are saying the time limit for raising the goods sent on approval is before or at the time of supply. Before or at the time of, when it will become supply, when you say, okay, sir, it will become supply. It is not the time when I am sending the goods to you. That's why before or at the time of supply. Before or 6 months from the date of removal, or 6 months from the, whichever is earlier, whichever is, sir. So, two time limits are there. So, today if I send the goods to you, within 3 months you are saying that accepted, then sir, by that time I have to raise the invoice. Or my dear lovable students, till 6 months after sending the goods, you are not opening your mouth. Then Act is saying that within 6 months from the date of removal, whichever is earlier. So before or at the time of supply, or 6 months from the date of removal, whichever is earlier. Repeat once again. Before or at the time of supply, or whichever is. So what we have consolidated is, if you are a supplier of goods, 147 is the shortcut. 147. 31 subsection 1, 31 subsection 4, 31 subsection 7. 31 subsection 1 again classified into 31 subsection 1 clause A, 31 subsection 1 clause B. 31 subsection 1 clause A, supply involves movement of goods. In case of supply involves movement of goods, you are supposed to raise the invoice on or before the date of removal of goods. In case of supply does not involve movement of goods, you are supposed to raise the invoice on or before the date of delivery of goods or goods made available to the recipient. Are you all ready with me? 31 subsection 4, continuous supply of goods. Continuous supply of goods. Sir, in case of continuous supply of goods, sir, you are supposed to raise the invoice on or before the successive payment of account or successive statements are issued, as the case may be. Sir, in case of goods sent on approval, sale or return basis, you are supposed to raise the invoice on or before the time of supply or 6 months from the date of removal, whichever is earlier. Comfortable? That's it with regard to the supplier of goods. Coming to the supplier of what? That is section 256. That is, sir, 256 is the shortcut. There it is 147. Here 31 subsection 2, 31 subsection 5, 31 subsection 6. Comfortable? Sir, 31 subsection 2 is saying that you are a supplier of services, man. You may either a normal service provider. What service provider? Or NBFI. You may be either NBF or you may be NB fit. You may be that. What 31 subsection 2 section is doing, that it is categorizing the service provider into 3 categories: normal person, NBFI and NB fit. Sir, if you are a normal service provider, my dear lovable students, you have to raise the invoice within 30 days. From the date of provision of services, from the date of. That means once you have provided the service, sir, within how many days? 30 days, you are supposed to raise the invoice. That is the time limit. So what service is saying that first complete the service. Then within how many days? 30 days, you are supposed to raise the invoice. In case of taxable supply of service shall be issued within a period of how many days? 30 days from the date of supply of services. So if you are a normal supplier of services, you are supposed to raise the invoice within 30 days from the date of provision of services. Comfortable? Sir, I am NBFI. Who is that person, sir? I am, sir, NBFC, that is non-banking financial company, or I am banking company, or I am financial institution, or I am an insurer. Are you all really with me? Then when I am supposed to raise the invoice, the period within which the invoice or any document in lieu thereof is to be issued shall be how many days? 45 days from the date of supply of services. So general person, from the date of provision of services. If you are NBFI, 45 days from the date of provision of services. With regard to NB fit, what is that? NB fit. Who is NB fit? Number 1, non-banking financial company. Number 1, banking company. Number 2, financial institution. Number 3, insurer. Number 4, and telecom operator. Number 5, repeat once again, who and all? Non-banking financial company, banking company, financial institution, insurer and telecom operator. Sir, sometimes what they will do, you know, they will be supplying inter-branch transaction. They will be supplying for those inter-branch transaction. You are supposed to raise the invoice on or before at the time when the supplier record the same in his books of accounts. Supplier record the same in its, or before the expiry of that quarter during which the supply was made. For example, I am the supplier, I am the NB fit, I am supplying services to my own distinct person as specified in section 25 subsection 4 or 25 subsection 5 as the case may be. So my dear lovable students, as a supplier, I have to record that in the books of accounts. Before I record that in the what of accounts? Books of accounts. Or sometimes, sir, during this quarter only I have provided that services. By the end of that quarter, I have to record in the what? I have to raise the what? Invoices. Are you all ready with me? That's it, man. This is what 31 subsection 2 I am consolidating. You are a supplier of services. Your services classified into 3 category. Normal cases, NBFI, NB fit. If you are a normal supplier of services, you are supposed to raise the invoice within 30 days from the date of supply of services. Sir, if you are NBFI, instead of 30 days, replace with 45 days. If you are NB fit, who are supplying inter-branch transaction as specified in section 25, you are supposed to raise the invoice on or before the date on which the service has been recorded in the books of accounts of the supplier, or before the expiry of the quarter during which the supply was made. They have not mentioned whether whichever is earlier or whichever is later. Hello, sir. Coming to 31 subsection 5, that is in case of continuous supply of services. In case of, we already talked about continuous supply of goods. Can you recall quickly what is the subsection which is talking about? 31 subsection 4. Now talking about 31 subsection 5. This is for what? Services. Sir, if a service provider is providing service to a service recipient for a continuous period of 3 months, then such a service is called as continuous supply of. For example, if you are having mobile phone, sir, Jio, Tata Docomo or Aircel or Airtel companies, the SIM provider, they are providing continuously for more than 3 months. Then such a service is called as continuous supply of services. Right, sir? Sir, in case of continuous supply of services, at least how much month? 3 months service provider should provide the services. Always there will be a contract. Always there will be a, whether it is continuous supply of goods or continuous supply of services, there will be a, their successive payment or successive statement of accounts will be there. Comfortable? Here, my dear lovable students, where the due date of payment is ascertainable from the contract. Check that contract. Check that. In that contract, if the due date for payment is ascertainable, invoice shall be issued on or before the due date of payment. Invoice shall be issued on or before the. Now, where the due date of payment is not ascertainable from the contract, invoice shall be issued before or at the time when the supplier of service dash the payment. So you have to go and check the contract. Is the due date is ascertainable from the contract? Is the due date is not ascertainable from the contract? If the due date is ascertainable from the contract, you are supposed to raise the invoice on or before the due date of payment. Sir, in the contract, the due date is not ascertainable. If that is the case, my dear lovable students, you are supposed to raise the invoice on or before when the supplier is dash the payment, receives the payment. Comfortable? Now coming to case number 3, where the payment is linked to what of an event. That means, sir, the contractor will provide construction services. Can a contractor construct a house within 3 months? No, not practically possible. He will take more than 3 months. Are you all really with me? That means it is a continuous supply of what? Services. As per contract, the contractor is saying that once I put the foundation, you have to give me 10 lakh. First floor, 10 lakh. Second floor, 10 lakh. Tiles, another 10 lakh. Are you all really with me? That's what, sir, when the payment is linked to what of an event. Then invoice shall be issued on or before the date of what of the event? Completion of the event. So one line summary of the entire discussion is, in case of continuous supply of services, you have to check whether the due date of payment is ascertainable, due date of payment is not ascertainable, if the payment is linked to completion of an event. If the due date for payment is ascertainable means, sir, the invoice has to be raised on or before the due date of payment. Sir, due date for payment is not ascertainable. Invoice has to be raised on or before the date of receive the payment. And with regard to completion of an event, my dear lovable students, then date of completion of that event. Are you all ready with me? Sir, you may be a supplier of services, but in between that supply would have stopped. That is called a cessation of supply. Cessation of. Sir, for example, If you are going to provide a supply having a full value of 10,000 rupees, my dear lovable students, you provided supply to the extent of 6,000, but still you have to provide how much? 4,000. By this time, your supply has been stopped. What GST Act is saying that to this extent, raise the invoice. To this extent. So in case where a supply of service ceases means what? Stops under a contract. Under a before the what of supply, completion of supply, invoice shall be issued at the time when supply what? Ceases, and such invoice shall be issued to the extent of supply made before such cessation. That means I am actually supposed to provide a supply of 10,000, but I have actually provided only, but supply has been stopped. What the GST Act is saying that, my dear lovable students, you are supposed to raise the invoice to the extent how much you have supplied. That is, you have supplied to the extent of. This is a summary chart. What is the time limit for continuous supply? My dear lovable students, we are having two types of continuous supply. Either continuous supply of goods or continuous supply of. With regard to continuous supply of goods, you are supposed to raise the invoice, sir, either before or at the time of each such successive statement of account is issued or successive payment is received, as the case may be. Comfortable? With regard to continuous supply of what? Services, due date of payment is ascertainable from the contract or not so ascertainable, or payment is linked to completion of an event. If the due date for payment is ascertainable from the contract on or before the due date of payment, if it is not so ascertainable before or at the time of receipt of payment, payment is linked to completion of an event on or before the date of completion of that event. Are you comfortable, sir? This is an overall summary before your day of examination, like last day revision, my dear. Time limit for issue of invoice. In order to issue an invoice, you should do taxable supply of either goods or what? If you are supplier of goods, you should check either goods involves what of goods? Movement of goods. Supply involves movement of goods. Supply does not involve movement of goods or sale or. If supply involves movement of goods, you are supposed to raise the invoice on or before the date of removal of goods. With regard to supply does not involve movement of goods, you are supposed to raise the invoice on or before the date of delivery of goods or goods made available to the recipient. Sir, with regard to sale or return basis, sir, before or at the time of supply or within RMS from the date of removal, whichever is earlier. Comfortable? With regard to services, man, within 30 days from the supply of services, generally. And with regard to NBFI, instead of 30 days, it is 45 days. Are you all really with me? That's it with regard to the first recalling of, sir, when a supplier of goods and when a supplier of services is supposed to raise the invoice. If you see, this is the flow of section in section 31. We are talking about basics. 31 subsection 1. What is the time limit for issue of invoice in case of supplier of goods? 31 subsection 2. Time limit for issue of invoice in case of supplier of services. And 31 subsection 3 is other provision for both supplier of what and what? Goods and. So if you are a supplier of goods, go and check the time limit under 31 subsection 1. If you are supplier of services, go and check under 31 subsection 2. Sir, if for both of you, provisions of 31 subsection 3 will be what? Applicable. This many subsections are there in 31 subsection 3. 31 subsection 3 clause A, 31 subsection 3 clause B, 31 subsection 3 clause C, 31 subsection 3 clause D, 31 subsection 3 clause E, 31 subsection 3 clause F, and 31 subsection 3 clause G. Various document other than tax invoice. If a supplier of goods or supplier of services is making supply, my dear lovable students, hello sir, he is supposed to raise the tax invoice. In addition to the tax invoice, he is supposed to raise other documents also. That's what 31 subsection 3, 31 subsection 3 clause A, clause B, clause C and all. Sir, in order to understand this, you should have a minimum background of the chapter registration. Of the chapter what? My dear lovable students, as per the GST Act, if today I am starting supply of goods or services or both, today itself I am not liable to take the registration. Today itself I am not liable to take the. Sir, if my aggregate turnover is up to 10 lakh or 20 lakh or 40 lakh as the case may be, to that extent, I am not liable to take the registration. I am not liable to take the. This is as per section 22. This is as per section. There are 12 circumstances under section 24. If you are falling under those circumstances without the threshold limit, you are compulsory liable to take the registration. Are you all really with me? That's what section what? 24. 20. Sir, and the GST Act is giving you a scope of voluntary registration under section 25 subsection 3. These are the three ways in which you can come inside the GST, either under section 22 or under section 24 or under section 25 subsection 3. Comfortable. Once you are liable for registration, what Act is saying that within 30 days, you are supposed to take the registration. This is a breathing time what the Act is giving. How much days? 30 days. That means this 30 days you are having breathing time to take the registration, my dear lovable students. But sir, you will be applying for registration within 30 days. For example, 25th day you have applied for registration. My dear lovable students, the department will take either 7 days, sir, to process your application and they will give you the RC. So RC will be given after certain number of days. RC will be given after certain number of days. But during this intervening period, you can't, sir, stop your business. You will be supplying goods or services or both. But during this time, you have not received your RC in your hand. You can't raise the what invoice? Tax invoice. But the recipient who have purchased from you during this intervening period need the credit. Need the, as per section 16 subsection 2, in order to take ITC for that recipient, possession of valid tax paying document is mandatory. So without that, he can't take what? ITC. So what Act is saying that first you get the RC. Within 1 month of the receipt of RC, within 1 month of the receipt of RC, you have to revise all the tax invoice what you have issued during the effective date of registration, during the till the grant of RC. Are you all really with me? This is called as revised tax invoice. This is called as, look at here, man, revised invoice on issuance of what, man? Registration certificate. Are you all really with me? So a registered person may within how much month? 1 month. Very important point. So first you have to get your registration certificate. So once you get the RC within how much time? From the date of issuance of certificate of registration, and in such manner as may be prescribed, issue a revised invoice. Issue a against the invoice already issued during the period beginning with the effective date of registration till the date of issuance of certificate of registration to him. So during this intervening period, my dear lovable students, you would have issued so many invoices. But in that invoices, GST number will not be there. That invoices cannot be considered as what invoice? Tax invoices. So first you get the RC. Within 1 month of receipt of the RC, my dear lovable students, you are supposed to issue revised tax invoice for the period between the effective date of registration till the actual date of grant of RC. Comfortable, sir? Sir, what is the requirement for this provision? Why we are having 31 subsection 3 clause A in the GST Act? Question arises, sir. This provision is necessary as a person who become liable for registration has to apply for registration within how many days? For registration. Once you are liable for registration, that day itself practically you can't take the registration. You are liable for registration within. So there is a breathing time. When such an application is made within the what period? Time period. What is the time period? 30 days. And registration is granted. The effective date of registration is the date on which the person become what for registration. That means, sir, this date your aggregate turnover exceed 20 lakh or 40 lakhs or 10 lakh as the case may be. So today itself you are liable to take the registration, my dear lovable students. So if you are taking registration within how many days? 30 days, you are a good boy. If you are a good boy, the effective date of registration is the date of liable for registration and not the date of grant of RC. Comfortable, sir? Sir, What is the purpose of this? In order to pass on the ITC, in order to pass on the, thus there would be time lag between the date of what of certificate, grant of certificate of registration, and the effective date of registration. Because once you applied for registration within how many days? 30 days, my dear lovable students, you are a good boy. If you are a good boy, sir, your effective date of registration is not the date of grant of RC. It is a date on which you are liable to take the registration. Comfortable? For supply made by such person during this intervening period. My dear lovable students, what is that intervening period? It is a period between the date of effective date of registration till the grant of RC. The law enable issuance of revised what invoice, so that the ITC can be availed by recipient on such supply. Comfortable? Sometimes, my dear lovable students, during that intervening period, not only invoices, revised tax invoice, I have to revise consolidated revised what invoice? Tax invoice. What is the concept, man? Consolidated revise. So the registered person may issue a consolidated revised what invoice in respect of all taxable supply made to a recipient who is not registered under this act. Sir, during this intervening period, I would have supplied to a registered person or what person? Unregistered person. Sir, for whom and all I have issued registered person, he need ITC. For that ITC, my dear lovable students, I have to issue the tax invoice, revised tax invoice. Are you really with me? Sir, if the recipient is an unregistered person, he don't want ITC. But still, sir, in that invoices, whatever I have issued does not contain the GST number. So I have to issue the consolidated revised tax invoice. This and all 1 or 2 more questions they will be asked in exam. Are you all really with me? Consolidated revised tax invoice in case of what state supply? That may be either intrastate supply or interstate supply. Sir, in case of interstate supply where the value of supply does not exceed how much? 2,50,000. If the value does not exceed 2,50,000, consolidated revised tax invoice may be issued separately in respect of all recipient located in a particular state. That means up to 2,50,000 you have to issue state-wise consolidated revised what invoice? Tax invoice. Sir, what is the concept? This, sir, one-line summary of the entire discussion is, sir, revised tax invoice to be issued in respect of taxable supply effected during this period. Which period? Between the effective date of registration till the date of issuance of certificate. Right, sir? Sir, for whom and all you would have issued, that person may be either registered person or, if that person is a registered person, he has to take ITC. So, consolidated revised tax invoice will not be applicable. Sir, you have to issue the revised what invoice? Tax invoice. Comfortable? Sir, unregistered person. Sir, you are supplying during the intervening period to an unregistered person. Sir, for state-wise, you can issue consolidated revised what invoice? Other than state-wise, no such concepts, sir. Are you all really with me? That's it with regard to 31 subsection 1 clause A, which is talking about consolidated tax invoice and revised tax invoice and consolidated revised tax invoice. Shall I move to the next one, man? 31 subsection 3 what B? Clause B. Sir, you have came out of the intervening period. Now your business is going as normal. There is a concept called as, sir, no tax invoice in value less than how much? Sir, if these 3 conditions are satisfied, sir, instead of issuing what invoice? Tax invoice, you can issue consolidated what invoice? Tax invoice. That is on a daily basis. If you are a supplier of either supplier of goods or supplier of what? Services. Hello, sir. And if your value of supply is less than 200, value of supply is less than, MCQ may test in exam. Value of supply may be less than, and the recipient is unregistered. The recipient is, and recipient does not require such invoice, then no need to issue the tax invoice. Sir, on a daily basis, you can issue bill of supply. You can issue what of supply? Instead of what, man? Sorry, instead of tax invoice, you can issue consolidated tax invoice. What invoice, man? Consolidated. And all the 3 conditions are applicable even to what of supply also, bill of supply also. What does this mean? What does this 31 subsection 3 clause B is talking? For example, if you are a stationery shop, you are a registered stationery shop, nearing to ANM classes, nearing to a school. Sir, some student is coming and buying one pen, 10 rupees pen. Is it possible to raise tax invoice for even 10 rupee, 20 rupee, 30 rupee and all? Then whatever bill cost, whatever profit we are earning will go as the printing and stationery. Correct? So 31 subsection 3 clause B is saying that if three conditions, if you are satisfying on a daily basis for every supply, don't raise the tax invoice, raise the bill of supply. Sorry, base the consolidated tax invoice. Sir, the same concept will be applicable for what of supply also, bill of supply also. What are the three conditions, man? Value of supply should be less than 200. Recipient is an unregistered person and recipient does not require such tax invoice. Are you all really with me? Next, we are going to talk about what of supply, bill of supply. So, what is 31 subsection 3 clause A? Revised tax invoice and consolidated revised tax invoice. What is 31 subsection 3 clause B? Consolidated tax invoice on a daily basis if three conditions are satisfied. I'm coming to 31 subsection 3 clause C. Sir, you are a registered person supplying exempted goods or services or both. That means your goods or service are both covered under section 11 of the CGST Act or section 6 of the IGST Act. Or you are paying tax under section 10. What is section 10? Composition levy. Hello, sir. Then instead of issuing a what invoice? Tax invoice, you have to raise a bill of supply. You have to raise a. So what is the one line summary, my dear? Sir, supplier may be supplying taxable supply of what or what or what. Then he has to raise the what invoice? Tax invoice. If three conditions satisfy, consolidated tax invoice on a daily basis. Are you all really with me? Sir, if you are supplying exempted supply of goods or services or both, or you are a composition dealer under section 10, you are supposed to raise the bill of supply or consolidated bill of supply as the what may be, case may be. Comfortable? Even no need to raise the bill of supply if three conditions are. No bill of supply if the value is less than 200. And that bill of supply should have QR code. QR in the sense means what? QR full form? Quick response code. What, man? Quick response code. What code? So one line summary of the entire discussion is bill of supply shall be issued by a what person? Registered person. And no what invoice? Tax invoice. If supplying exempted goods or services or both, or paying tax under what scheme? Composition scheme. So what 31 subsection 3 is dealing various other document than tax invoice. 31 subsection 3 clause A is dealing with the revised tax invoice and consolidated revised tax invoice during the intervening period. Comfortable? 31 subsection 3 clause B is talking about the consolidated tax invoice if three conditions are satisfied. 31 subsection 3 clause C, bill of supply. In case of a registered person who are supplying exempted goods or services or both, or composition tax. I'm coming to the next one, man. Very simple, man. 31 subsection 3 clause D is talking about receipt to voucher. What voucher? You are a supplier either of goods or services or both. You may get advances from the customer, right, sir? When you get advances, the document what you are supposed to be raised is what voucher? Receipt. For advances, issue of what voucher? Receipt to voucher. So if you got any advance, issue the what voucher? Sir, sometimes when I am raising the receipt voucher, I don't know what is the rate of tax and nature of supply. An MCQ question, my dear lovable students. If you don't know the rate of tax and MCQ, it will be, sir, it will be treated as 18%. It will be treated as. So where at the time of receipt of advance, if the rate of tax is not determinable, the tax shall be paid at 18%, and nature of supply is not determinable, the same shall be treated as what state supply? Interstate supply. This is one thing you have to carry. Sir, when you are getting the advance, if you don't know the rate of tax, it should be 18%. Nature of supply should be fantastic, sir. Have you got the advance? Once you got the advance, you are supposed to provide the what? Receipt voucher. And you have to provide the supply, either supply of goods or supply of what? Services. If you are not able to provide the supply to the recipient, you have to refund that amount. Alright, sir? Then you have to give the refund voucher as per 31 subsection 3 clause E. What voucher? That is refund voucher if no supply is made and advance is what? Refunded. Comfortable, sir? So, receipt voucher for what payment? Advance payment. So, you got the advance from the customer. Right, sir? What you are supposed to do? You have to provide the supply. You have to provide the, if you provide the supply made means issue what invoice? Tax invoice. If supply not made means issue refund voucher. Comfortable? The last set of discussion, 31 subsection 3 clause F, invoice requirement in case of what charge? We are having two reverse charge 9353, 9454, right, sir? Then, sir, a registered person who's liable to pay tax under what or what? Sir, I am the person who are liable to pay tax under 93 or 53. I am, sir, getting services from an unregistered person. That means supplier is a unregistered person and recipient is a registered person. Recipient is a. Then, my dear lovable students, the recipient, since he is a registered person, he is having the responsibility to raise the what invoice? Tax invoice. Under section 31, subsection 3, clause F. Hello, sir. A registered person who is liable to pay tax under 93 or 94 shall issue an invoice in respect of what or what or what received by him from a supplier who is not registered on the date of receipt of what or what or what. That means if the supplier is an unregistered person and recipient is a registered person, this registered person, sir, who is liable to pay tax under 93 or 94 is the person responsible to raise the what invoice? Tax invoice. Because the supplier can't raise the, because he is a dash person. Thus, the recipient liable to pay tax under 93 has to issue an invoice only when supplies has been received from a. So, what is the one line summary of the entire discussion? If the supplier is a unregistered person and recipient is a registered person being liable to pay tax under 93 or 94, the recipient being the registered person is the person liable to pay raise the what invoice. Comfortable? That's it with regard to that also. An issuance of what voucher? Payment voucher. Issuance of. Now, my dear lovable students, I am the registered person who has raised the tax invoice. I will make the payment to that unregistered supplier. So, when I make the payment, I am supposed to raise the what voucher, man? A registered person who is liable to pay tax under what or what shall issue a payment voucher at the time of making payment to whom? Supplier. Are you all really with me? So, we are having 31 subsection 3 clause A. Can you say what is that? Revised tax invoice or consolidated revised tax invoice. Comfortable? What is 31 subsection 3 clause B? Consolidated tax invoice, that is on normal days if three conditions are satisfied. Value of supply should be less than and recipient should be, and the recipient does not need the invoices. Comfortable? 31 subsection 3 clause C, bill of supply. If you are a registered person, instead of supplying taxable goods or services or both, if you are supplying exempted goods or services or both, and if you are a composition dealer, instead of raising tax invoice, issue the bill of supply. 31 subsection 3 clause D is talking about the receipt voucher. What voucher? If you receive what? Advances, you have to raise the receipt voucher. 31 subsection 3, sir, after you receive the advances, if you are not able to provide the supply, you have to refund that amount. At that time, you have to give the refund voucher. What voucher, man? These are the additional documents which we have other than tax invoice, right, sir? 31 subsection 3 clause F, sir, tax invoice to be raised by the registered person who are liable to pay tax under 93 or 94 as the 31 subsection 3 clause G is the payment voucher. If this registered person is making payment to that unregistered supplier, then payment voucher has to be raised. With this, other documents also comes to an. Are you all really with me? Other provision regarding the debit note and what? Credit note. Sir, now I'm going to close this prohibition of unauthorized collection of tax as per section 32. As per section. Sir, what the GST Act is saying that these two people should not collect tax. Number one, unregistered person not to collect tax. Are you an unregistered person? At any cost, you are not supposed to collect the tax. Nyayam. And registered person to collect tax as per the Act. Are you really with me? If for your product, if it is 12%, you are supposed to collect tax only at 12%. Don't collect tax at 18%. That's what section 32. If you are, sir, being an unregistered person collecting tax or being a registered person collecting wrong tax, it will become unauthorized collection of tax. As per section what 2? Are you all really with me? Sir, we understood that who are the person who are supposed to raise the what invoice? This is what invoice. In that tax invoice, show the tax amount clearly. How much is the CGST? How much is the SGST? How much is the IGST? That's what amount of tax to be indicated in the tax invoice and other document. So in the tax invoice, you have to specifically show what is the amount of tax. That's what section what? 33. 33. Are you all really with me? Sir, my dear lovable students, you would have issued tax invoice. You would have issued. After issuing tax invoice, there may be some mistake in the tax invoice, whatever you have issued. Then you will issue an alternate document called as debit note and credit note. What note and what note? Debit note and credit note. Tell me. That's what section what? 34. Under these 4 circumstances. How many circumstances? Because it is 34. That is why it is how many circumstances? You will be issuing credit note. You will be issuing. So you may get a question that what are the 4 circumstances in which you have to issue a what note? Credit note. Circumstance number 1. The taxable value in the tax invoice is found to exceed the taxable value in respect of what? Such supply. For example, I have raised an invoice. I raised an invoice like this. I showed like this, my dear, value of supply as 10 lakh. Value of supply as. Actually, the value of supply is only 8 lakh. But I have extra debited how much lakh? 2 lakh. So I have to credit to you. I have to issue a what note? Credit note. So I actually have issued a tax invoice. But in that tax invoice, I'm supposed to raise only 8 lakh. But I showed how much lakh? 10 lakh. Then there is an extra 2 lakhs. My dear lovable students, for that 2 lakh, I can issue what note? Credit. That is circumstance number. That is a taxable value in the what invoice? Is found to exceed the taxable value in respect of such. Sir, instead of 8 lakh, if you charge 10 lakh, automatically the tax will also be more. Because I would have charged tax at 10 lakh instead of. So, the tax charged in that tax invoice is found to exceed the tax payable in respect of such. Instead of collecting 18%, if I collect 28%, that extra will be there. To that extent, I have to reverse by issuing what note? Or when the goods supplied are returned by the what? Recipient. You are the recipient. You have returned the goods to me. Then, my dear lovable students, I have to credit to you by way of issuing the what note? Credit note. Where the goods or services or both supplied are found to be what? Then you will not give the money to me because the goods are deficient. Then I have debited you when I am sending the goods. Now I have to credit you by way of issuing what note? Credit note. Comfortable? So these are the circumstances in which the credit note has to be issued. Taxable value in the invoice is more than the taxable value in respect of such supply. Tax charged in the invoice is more than the tax payable in respect of such supply. Where the goods supplied are returned by the recipient, where the goods or services or both are supplied are found to be defective. Comfortable? Fantastic to the core. Coming to the SAR debit note. These are the 2 circumstances in which you are supposed to raise the what note. Number 1, the taxable value in the tax invoice is found to be less than the taxable value in respect of such supply. That means, my dear lovable students, I have shown only 8 lakh, but the actual value of supply is 10 lakh. But that means I have short debited you. So I am going to debit you extra by way of how much lakh? 2 lakh. That is called as what note? Debit note. And tax charged in the tax invoice is found to be less than the tax payable in respect of such supply. That means I should have charged 28%, but I have charged only 18%. Registered supplier of goods or services or both may issue what note? Debit note. That means taxable value in the invoice is less than taxable value in respect of such supply. Or tax charged in the invoice is less than tax payable in respect of such supply. In that circumstances, you will issue the. That's it with regard to the, sir, when you are supposed to raise the tax invoice. That is the time limit for raising the tax invoice. What are the extra other documents you are supposed to be raised, like debit note and credit note? With this background, my dear lovable students, we can start with the time of supply, which are covered under section 12, 13 and 14. Are you comfortable till now? Yes, sir. Sir, I hope that you would have pakka understood who is supposed to raise the tax invoice. Who is supposed to raise the tax invoice is explained in section 31. 31 is the what invoice? Tax invoice. Now going to the contents of the tax invoice, this is a very important chapter with regard to the procedural aspects. Sir, I understood that I may be a supplier of goods or supplier of services, right, sir? If I am a supplier of goods or supplier of services, I have to raise the what invoice? Tax invoice. Sir, this content should be there in the tax invoice. Number one, supplier's details. First, my detail. First, supplier's details like name, address, GST, IN of the what? Supplier. A consecutive serial number not exceeding how many characters? And date of its issue. These three basic things should be there. What are three basic things? Tell me. Name, address and GST, IN of the supplier. A consecutive serial number not exceeding 16 characters and date of its issue. Now the next one, recipient's details. The second part is what? Recipients. That recipient may be registered recipient or unregistered recipient. If the recipient is a registered recipient, what is its name? What is its address? And GST, IN and UIN of the recipient. Unique identification number of the recipient. If the recipient is a what person? Unregistered person. If the recipient is an unregistered person, you have to check the value of supply. You have to check that whether that value of supply is 50,000 or more, or the value of supply is less than 50,000. Comfortable? If the value of supply is 50,000 or more, my dear lovable students, you have to say the name and dash of the recipient, address of the recipient and the address of delivery along with the name of the state and its code. If the recipient is an unregistered person and the value of supply is less than how much? 50,000. Then unregistered person recipient may still request the aforesaid details. All these details, sometimes he may ask that please show in the invoice. Then we are supposed to show in the invoice. Comfortable? So first one, whose detail? Supplier's detail. Number two, recipient detail. Number three is goods and services details. Like what is the HSN code for goods or services? Harmonized system of nomenclature. Harmonized system of, that is its name. And number two is description of what or what? Goods or services. Quantity in case of goods and unit or unique quantity code and total value of supply of what or what or what? Goods or services. These are the details you have to show in the what invoice? Tax invoice. Number one, whose detail? Supplier's details, recipient details, goods and services details. The next one is tax detail. What is the taxable value of supply of goods or services? What is the taxable value? Whether it is 5 lakh or 10 lakh or 20 lakh. What is the rate of tax? That is CGST, how much? SGST, how much? IGST, how much? What is the amount of tax charged in respect of taxable what or what? Goods or services. Place of supply along with the name of the state. In case the supply, in case of interstate trade or what? Commerce. These details and all given. Number one, what? Taxable value of supply of goods. Rate of tax. Amount of tax. Place of supply along with the name of the state. Comfortable? The other details. So tell me, what are the contents of the tax invoice? Number one, supplier's detail, recipient detail, goods and services detail, tax details, other details. What are the other details? Address of delivery, where the same is different from the what of supply. Place of supply is in Kerala, but it has to be delivered in some other place, means what is address of delivery has to be separately shown in the invoice. Whether the tax is payable on what charge basis? Whether the tax is liable to be paid on FCM or RCM. And signature or the digital signature of the supplier or his what representative. You have to sign it in the invoice that all the details has been pakka shown in invoice. Comfortable? And the last additional information is QR code and e-invoice. QR code, and in your invoice you have to show the QR code, which is quick response code. What code, man? QR code means quick response code, having embedded IRN. In that, IRN should be there. IRN stands for invoice reference number. Tell me, invoice reference number. MCQ they may ask. Invoice reference number. So QR code stands for quick response code. And in that QR code, you should embed the IRN. Are you all really with me? Yes, sir. And in that QR code, you have to, in that invoice, you have to declare that e-invoice is not required to be what? Issued. So you have to check whether you have to issue the e-invoice or not. If you are a person who are supposed to issue the what invoice? E-invoice, you should not write this. Otherwise, you have to mention that e-invoice is not required to be issued. In all cases, when the invoices are issued, are you all really with me? Other than an e-invoice by a taxpayer having aggregate turnover in any preceding financial year from 17-18 onwards, more than how much? Very important data for examination. If your aggregate turnover in the immediately preceding previous year, any of the immediately preceding previous year exceeds how much crore? You are supposed to raise the e-invoice. You are supposed to raise the, suppose someone is coming and asking you who is supposed to raise the what invoice? E-invoice. If the aggregate turnover in the immediately preceding previous year exceeds 5 crore, then they are supposed to raise the invoice. Right, sir? So, invoice having what code, man? QR code. Invoice is having, whose invoice should have QR code? Question arises. This may be a 4-mark question for examination, sir. Whose invoice should have what code? QR code. Sir, an invoice issued by a what person? If you are a registered person whose aggregate turnover in any of the preceding financial year from what? 17-18. Because from 17-18 only GST started. That is why from 17 exceeds how much crore? 500 crore. That means if the aggregate turnover in the immediately preceding previous year or any of the previous year from 17 exceed how much crore? Be very clear. Be very clear. If the turnover exceed, first of all, you should be a registered person whose aggregate turnover in any preceding financial year. Count from 17-18. Look at 17-18 turnover, 18-19 turnover, 19-20 turnover, 20-21 turnover, 21-22 turnover, 22-23 turnover. Hello, sir. Any of that previous year exceeds how much crore? 500 crores. How much crore? And if you are supplying to an unregistered person, to a what person? Shall have dynamic what? QR code. Shall have dynamic QR code. Are you all really with me? But they have created an exception to the QR code. However, such a registered person make a dynamic what code? QR code. That is dynamic quick response code available to the recipient through a digital display. Such B2C invoice issued by such registered person containing what reference? Payment using a dynamic QR code shall be deemed to have quick response code. Are you all really with me? That means if you are a registered person, if your aggregate turnover in any of the previous year from 17-18 exceeds 500 crore. If you are supplying to a what person? Unregistered person, sir, shall have dynamic QR code. Are you all really with me? Yes, sir. Sir, what is this full line? We will read it. An invoice issued by a what person? Whose aggregate turnover in any preceding financial year from 17-18 onwards exceeds how much crore? Other than means except these people who's referred in rule number 54 sub rule 2, 54 sub rule 3, 54 sub rule 4 or 54 sub rule 4a. That is service supplier of what services? That is except notified services. Unregistered person referred in section 14 of the what act? IGS. That is OIDA are service suppliers. Other than these two people, to a dash registered person shall have dynamic QR code. Are you all really with me? When you are raising the invoice, the another requirement in the tax invoice is the HSN code, harmonized system of nomenclature, or otherwise called as what code? You should understand about this. This is another 4-mark area they may ask. The number of digits of harmonized system of what clature? Code for goods or service that a class of registered person shall be required to be mentioned. That means when you are raising the tax invoice, you have to mention HSN code. What code? Sir, a class of supply of goods or services or both for which specified number of digit of HSN shall be required to be mentioned by all registered what payer. If you are a registered taxpayer, in your tax invoice, HSN code should be mentioned. HSN code should be, how much code I should mention? Sir, if your annual turnover in the immediately preceding previous year is up to 5 crore means 4 digit. Up to 5 crore mean? More than 5 crore means 6 digit. More than 5 crore mean? Sir, less than 5. What is a number less than 5? That's why, sir, 4 digit. More than 5. What is the next number? That's why 6 digit. That's it, man. Sir, this may be a 1-mark MCQ question for examination. Take it. Sir, but exceptions are, however, a registered person having aggregate turnover up to how much crore in a previous year may not mention 4 digits of HSN code in a what invoice? Issued by him under the rules in respect of supply made to a what person? If you are supplying to an unregistered person, leave it, man. Are you all really with me? The next requirements are being a supplier of goods or services or both. You may do either export or SEZ supply. Export means you will take the goods or services or both from India to outside India, right, sir? Or what supply, man? SEZ supply. You are having two option, man. Option number 1 and option number 2. Sir, you are not doing domestic tariff area sale. You are going to export it. You are having two option. Option number 1 and option number 2. Option number 1, supply meant for what? Export. In that invoice, you have to write that supply meant for or supply to what unit? SEZ unit or what developer? For authorized operation on payment of what tax? Integrated tax. Either you can do the export on payment of integrated tax, or supply meant for export, or supply to SEZ unit or SEZ developer for what operation? Under bond or LUT option. Under bond or LUT means letter of undertaking. So you are having two options. You can complete your export either by way of payment of the IGST Act, or you can export without payment of IGST. That is called as bond or LUT option. Bond or, sir, particulars of export invoice are same as what invoice? You have to show the suppliers, sir, details, recipient details, tax details, goods details, everything has to be mentioned, even in case of a export invoice also. But in addition to all those, my dear lovable students, you are supposed to mention that we are going to export it either by payment of GST or by way of bond or LUT. However, the recipient is unregistered and the value of supply is how much? 50,000 or more. Instead of the name of state and its code, in case of an export invoice, name of country of destination is to be mentioned. Because export means it is not the place within India. You are going to export where? Outside India. So you should not mention the state code. You have to mention the country code. Logic clear? This may be another 4-mark question for exam. Income from bill of supply. Sometimes invoice come bill of supply. Sometimes they may ask a question. Write a short note on invoice come bill of supply. If you don't write this exact what is the concept, you won't get mark. Sir, where a registered person, first of all, you should be is supplying taxable as well as exempted goods. So they are dealing with the taxable plus what? Exempted goods or services or both to a dash person. Oh my God. That means the supplier should be a registered person. Supply should be taxable. Supply of taxable plus what? Exempted goods or service or both. And the recipient should be a single invoice come bill of supply may be issued. We already discussed in case of a registered person who are supplying taxable supply of goods or service or both, tax invoice will come. In case of my dear lovable students, sir, who is a registered person who are supplying exempted goods or service or both, bill of supply. If a person is doing both to an unregistered person, invoice come bill of supply can be issued. Comfortable? What is the manner of issuing invoice? We already discussed, man. 3 copy in case of supplier of goods, right, sir? Original copy to the recipient, duplicate copy to the transporter, and triplicate copy to the. And in case of supplier of what? Services, sir, my dear lovable students, original copy to the recipient and duplicate copy to the. And the serial number to be furnished how? Electronically. When you are filing form GSTR 1, that is your outward supply, you should mention from this number to this number I have made supply during this particular month. That's what serial number has to be mentioned, sir, electronically. Comfortable? Now we are going to talk about e-invoicing. What invoicing? Sir, e-invoicing is a very important topic for examination. Sir, they will be asking the applicability of e-invoicing more than 5 crore from 1st August 2023. For our year, earlier when it came, it was 500 crore, then it is cut down to 100 crore, then 50 crore, then 20 crore, then 10 crore, all put it on dustbin. That and all not relevant. For our examination, if, sir, in any of the financial year, aggregate turnover in any financial year from what? 17-18, because they made retrospective amendment. From 17-18, if the turnover is more than how much crore? 5 crore, my dear lovable students, you are supposed to raise the invoice. How much crore? Very important point. How much crore? So you are having 2 threshold limit here. One is for QR code and also for the invoice. For QR code, how much? 500 crores. Right, sir? For e-invoice, how much, man? 5 crores. Now, invoice other than e-invoice, not regarded as invoice. For example, if you are a person whose aggregate turnover in any of the previous year exceed 5 crore, and if you are not issuing e-invoice and you are issuing some other invoice, that some other invoice, put it on dustbin. It will not be treated as invoice. Comfortable? But always government will create certain exception, non-applicability of certain provisions in case of what invoice, man? E-invoice. We are going to talk in depth of e-invoice, man. Sir, how I have to create a e-invoice? This is what step number 1. Very important area for examination. According to me, whatever we have discussed till now, this area is highly important. E-invoice is not generation of invoice by government portal. E-invoice doesn't mean that, sir, you are raising the invoice by using the government portal. No. You have to raise the invoice by using your accounting software itself, by Tally, SAP or etc. Taxpayer will continue to create their GST invoice, their own accounting or billing or ERP system as per e-invoice schema. Are you all really with me? Sir, first, so that is what step number 1. You have to create the invoice by using your own accounting portal. Then that invoice has to be uploaded. That invoice has to be, this invoice then be reported to IRP. There is a concept called as IRP, Invoice Registration Portal. So first you have to create the invoice by your own. Then you have to upload to the IRP. What is IRP? Invoice Registration. On such reporting, IRP will generate IRN. IRP will generate. So what is step number 1? Self-preparation. What is step number 1? Once you self-prepare the invoice, you have to report to the IRP. What is IRP? Invoice Registration Portal. You have to register the invoice. How are you taking registration under the GST? Same way you have to register the invoice in a portal called as IRP, Invoice Registration Portal. Comfortable? Once you have registered the invoice, man, then IRN. What is IRN? Invoice Reference Number. That will create a number called as invoice, that will digitally sign it and return the invoice to the what? Supplier. So first create the e-invoice by your portal. Sir, upload in the IRP. It will generate IR and after that it will return back to you. Comfortable? This is step number 3. A GST invoice will be valid only with a valid what? IRN. What is IRN? Invoice Reference Number. Presently invoices, credit note, debit note when issued by notified person to a registered person, B2B or for purpose of export are covered under what invoice? E-invoice. That means, my dear lovable students, only to a registered person you are supposed to issue the e-invoice. To an unregistered person you are not supposed to raise the e-invoice. My turnover in the any of the immediately preceding previous year exceeds how much crore? 5 crores. Then I am supposed to raise the what invoice? E-invoices. Comfortable? How to raise the invoice? Do the self-preparation. Upload in the IRP. They will generate IRN and that invoice will be returned back to you. Only if you are going to supply to a registered person or export, then only you are supposed to raise the e-invoice. Though different documents are covered, for ease of reference and understanding, system is referred as what invoicing. Sir, what are the advantages of doing this e-invoicing? Quickly we will go through. This is advantage number 1. Auto reporting of invoices in the what return. And auto generation of e-way bill if required. Sir, once you have registered your invoices in the IRP, sir, automatically that will be reflected in the GSTR return. And if needed, automatically e-way bill will be generated. This is advantage number. Advantage number 2, it will facilitate standardization and interoperability leading to reduction of dispute among transacting party. For example, sir, I am the supplier, you are the recipient. Sir, e-invoices will reduce the interoperability. Sir, improve payment cycle. I know that when the invoice has been raised, I will get the proper timely payment. A reduction of what cost? Processing cost. And thereby great improving overall business efficiency. A pakka perfectly business will move. This is advantage number 2. It will enable the system level matching of input tax and output tax. My output tax collected will become your input tax. Are you all really with me? Automatically it will be matched. Because of that, government's efficiency will increase. Are you all really with me? It will eliminate the fake invoices, as the tax authority will have access to data in what time? Real time. Sir, you can't raise, sir, you can't supply without invoice. You can't, sir, raise the invoice without supply. Because first, once you made the invoices, you have to upload that invoices. You have to register in the IRP. It will generate IRN. Comfortable. So fake invoices can be, sir, eliminated. Are you all really with me? What are the class of person to be notified to be mandatorily to issue what? This is the one-line summary for examination. These guys are compulsory liable to issue what invoice? E-invoices. A registered person whose aggregate turnover in any preceding financial year from which year onwards exceeds how much crore has been notified as the class of person who has to prepare e-invoice in respect of what supply or for what export. These two are very important. First of all, you should be a registered person whose aggregate turnover in the any of the immediately preceding previous year from 17-18 exceed 5 crore. Then you are supposed to make e-invoices. Comfortable? Yes, sir. But these people, exception man, this presently such notified person are not required or allowed to report B2C invoices. What to see? So e-invoices are covered only under B2B. If you are supplying to B2B, then no, those people are only required to what? Issue invoices. Further, e-invoice also not applicable to invoice issued by input service distributor. ISD, as per section 20, he will raise the invoice. He is not supposed to raise the invoice. These are the two people exception. B2C and also ISD. Comfortable? Sir, RCM under section 9.3, what invoice applicable? Sir, you may be a supplier of what man? RCM under 9.3. Sir, you are supposed to raise the invoice. Still, for you, the e-invoice provisions will be, if the invoice issued by a what person is in respect of supply made by him, the tax on which is payable under reverse charge under 9.3, e-invoice is applicable. So, e-invoice provisions are applicable even for 9.3 also. Comfortable? Sir, RCM under 9.4 is e-invoice provisions not applicable. That means for 9.3, e-invoice provisions will be applicable. For 9.4, e-invoice provisions will not be applicable. On the other hand, where specified category of supplier are received by what person? From unregistered person, attracting reverse charge under 9.4 or through what of services? E-invoices does not arise. Comfortable, sir? Sir, these people, even though, another hit area for examination, even though your aggregate turnover in any of the preceding financial year from 17-18 exceeds how much crore? No need to raise the e-invoice. Normal invoice is enough. Number 1, special economic zone unit, SEZ unit. This is exemption number 1. And exception number 2, insurer or banking company or financial institution, including what? Exception number 3, GTA supplying service in relation to transportation of goods by road in a what carriage? Goods carriage. And supplier of passenger transportation services. That is exception number what? 4. And person supplying service by of admission to exhibition of what film? Cinematographic film in multiplex screens. And exception number 6, a government department or what? Local. These 6 people are not supposed to raise the e-invoice, even though they are. So following entities are exempt from mandatory requirement of e-invoice. You may get an MCQ question. 6 people. Number 1, special economic zone, insurer or banking company or financial institution including NBFC, GTA supplying service in relation to transportation of goods by road in a goods carriage, supplier of passenger transportation services, person supplying services by way of admission to exhibition of cinematographic film in multiplex screens, a government department or a local authority. Comfortable, sir? We already discussed, sir, how to generate a e-invoice. Step number 1, self-preparation. The taxpayer first to prepare and generate his invoice using his own ERP. And it has to be uploaded to, the invoice must conform to the e-invoice schema, standard notified format, and must have mandatory parameters. Right, sir? Sir, the details of this invoice are uploaded or reported by taxpayer to IRP. What is IRP? This way, taxpayer register his supply transaction on IRP on what? Uploading. And IRP returns the invoice with the IRN. What is IRN? Invoice reference number. After digitally signing the e-invoice and adding a what code? QR code. What is QR code? Quick response. Then the supplier share the e-invoice with the what? Recipient along with the what code. And after you generated a invoice, if you want to cancel it or amend it, where needed, the seller can cancel IRN for e-invoice already reported by reporting it on IRP within what time? We will give some specified time. Within that time, you can either cancel the e-invoice or you can amend the e-invoice already uploaded on what? IRP. Will be done only on what portal? Amendment of invoice is not possible through IRP. Comfortable? That's it, man. So, in today's revision, we have done when a supplier is supposed to raise the tax invoice. That is what covered in section what? 31. 31 is talking about 3 things. Basics, continuous supply and others. Basics, 31 subsection 1. Time limit for issue of invoice in case of supplier of goods. 31 subsection 2. Time limit for issue of invoice in case of supplier of services. 31 subsection 3. Other provisions. 31 subsection 4. Issue of invoice in case of continuous supply of goods. 31 subsection 5. Issue of invoice in case of continuous supply of services. And 31 subsection 6. Issue of invoice at the time of cessation of supply. And 31 subsection 7. Sale or return basis. Comfortable? This is a background you need to understand time of supply, which is section 12, section 13 and section 14. That will be the next first slot of revision, my dear lovable students. Have a proper revision of tax invoice, debit note and credit note. Then come to the time of supply. Then you will feel the difference. I hope that you are very much comfortable till now. I am with you from your heart. Anybody is there? Where is a grand clap?